2020 RTP, starting with question number 20. Part A, selection of sample by the reviewer in case of peer review. Answer is, the reviewer shall within 15 days of receiving the information from the practice unit, within 15 days of receiving sample, unit shall receiving information from the practice unit, select a sample of the assurance services that he would like to review and intimate the same to the practice unit. Select sample within 15 days from the information. Second point, the reviewer may also seek further or additional clarification from the practice unit on the information furnished or not furnished. Clarification. Third, initial meeting. The reviewer shall plan for an on-site review visit or initial meeting in consultation with the practice unit. The reviewer shall give the practice unit at least 15 days time. 15 days time to keep ready the necessary records of the selected assurance services. The reviewer and practice unit shall mutually cooperate and ensure that the entire review process is completed within 90 days from the date of notifying the practice unit about its selection for review. 90 दिन का टाइम देंगे. The reviewer shall give practice unit at least 15 days time to keep ready the necessary records of the selected assurance services, and 15 days of receiving the information, practice unit shall select a sample of the assurance services that he would like to review. Next short note is on classification of frauds by NBFC. In order to have uniformity in reporting, frauds have been classified as under based mainly on the provisions of Indian Penal Code IPC. Misappropriation and criminal breach of trust. Misappropriation and criminal breach of trust. Fraudulent encashment through forged instruments, manipulation of books of accounts, or through fictitious accounts and conversion of property. Fraudulent encashment through forged instruments, manipulation of books of accounts, or through fictitious accounts and conversion of property. Unauthorized credit facilities extended for reward or illegal gratification. Illegal gratification. Unauthorized credit facilities extended for reward. Negligence and cash shortages. Cheating and forgery. Negligence and cash shortages. Cheating and forgery. Irregularities in foreign exchange transactions. Irregularities in foreign exchange transactions. Any other type of fraud not coming under the specific heads as above. Irregularities in foreign exchange transactions. Cases of negligence and cash shortages and irregularities in foreign exchange transactions referred to in item D and F above are to be reported as fraud if the intention to cheat or defraud is suspected or proved. However, the following cases where fraudulent intention is not suspected or proved at the time of detection will be treated as fraud and reported accordingly. Cases of cash shortages more than 10,000 से ज़्यादा and cases of cash shortages more than 5,000 if detected by the management or auditor inspecting officer and not reported on the occurrence by persons handling cash. Cases of negligence and cash shortages and irregularities in foreign exchange transactions are to be reported as fraud if the intention or to cheat or defraud is suspected. Are to be reported as fraud. However, following cases where fraudulent intention is not suspected at the time of detection will be treated as fraud and reported accordingly if case of cash shortage is more than 10,000 and case of cash shortage more than 5,000 if detected by management. नहीं मिला तो 10,000, मिल गया तो 5,000. Next short note is on general steps in conduct of risk-based audit. Risk-based audits conduct four main phases, starting with identification and prioritization of risk to the determination of residual risk, reduction of residual risk to acceptable level, and the reporting to auditee of audit results. These are achieved through the following: understand auditee operations and prioritize risk. Understand auditee operations. UAO IPR. Understand audit operations to identify prioritize risk. Second point is assess auditee management strategies and controls to determine residual audit risk. Manage residual risk to reduce it to acceptable level and inform auditee of audit results through appropriate report. General steps in conduct of risk-based audit. Four main phases of risk-based audit. Understand auditee operations to identify and prioritize risk. UAOIPR. ये भी याद नहीं होता तो इसके लिए भी शॉर्ट फॉर्म बनाने पड़ेंगे, क्या कर सकते. Understand auditee operations and identify and prioritize risk. Second is assess auditee management strategies and controls to determine residual audit risk. Assessee audit management strategies AAMS and controls to determine residual audit risk. Assess auditee management strategies. Assess auditee management strategies. Assess auditee management strategies and controls to determine residual audit risk and controls to determine residual audit risk. Risk-based audit. Assess auditee management strategies and controls to determine residual audit risk. Manage residual risk to reduce it to acceptable level. Manage residual risk to reduce it to acceptable level. Manage residual risk. MRRR. AL. Manage residual risk to reduce it to acceptable level. Manage residual risk to reduce it to acceptable level. Inform auditee of audit results through appropriate report. Inform auditee of audit results through appropriate report. IAAR TAR. Inform auditee of audit results through appropriate report. Step 1 was understand auditee operations to identify and prioritize risk. Second step of risk-based audit is assess auditee management service strategies. Assess auditee management strategies and controls to determine residual audit risk and controls to determine residual audit risk. Manage residual risk to reduce it to acceptable level. Manage residual risk to reduce it to acceptable level. Inform auditee of audit results through appropriate report. Next is contents of audit plan. What are the contents of audit plan? The auditor shall develop an audit plan that shall include a description of nature, timing, and extent of planned risk assessment procedures as determined under SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment. The nature, timing, extent of planned further audit procedures at the assertion level as determined under SA 330, the auditor's responses to assessed risk. The other planned audit procedures that are required to be carried out so that the engagement complies with SAs. The audit plan is more detailed than the overall audit strategy that includes nature, timing, and extent of audit procedures to be performed by engagement team members. Planning for these audit procedures takes place over the course of the audit as the audit plan for the engagement develops. For example, planning of the auditor's risk assessment procedures occurs early in the audit process. However, planning the nature, timing, and extent of specific further audit procedures depends on the outcome of those risk assessment procedures. In addition, the auditor may begin the execution of further audit procedures of some classes of transactions, account balances, and disclosures before planning all remaining further audit procedures. So, this is what contents of audit plan is. SA 315 nature, timing, extent, SA 330 nature, timing, and extent of planned further audit procedures at the assertion level, PFAP at AL assertion level, and nature, timing, extent of planned risk assessment procedures, PRAP, as determined by SA 315, identifying and assessing risk of material misstatement through understanding entity and its environment. Auditor's responses to assessed risk, SA 330, planned further audit procedures at assertion level. Other planned audit procedures that required to be carried out so that the engagement complies with SAs. Other planned audit procedures. Planned audit procedures. Planned further audit procedures. ये हुए सारे के सारे शॉर्ट नोट्स. इसके बाद हम पढ़ेंगे उल्टे से क्वेश्चन नंबर 19, that is on professional ethics. S.A. Shrishti, C.A. Mishti are two partners in C.A. firm Shrishti Mishti and Associates. Being very pious, C.A. Shrishti organized a religious ceremony at her home, which she instructed her printing agent to add a designation chartered accountant with a name in the invitation cards. Later on, invitations were distributed to all relatives, close friends, and clients of both the partners. Advertisement. Clause 6, Part 1, First Schedule. Chartered accountant in practice shall be deemed to be guilty of professional misconduct if he solicits clients or professional work, either directly or indirectly, by circular, advertisement, personal communication, or interview, or by any other means. However, the Council of the ICAI is of view that designation CA as well as name of the firm may be used in greeting cards, invitations for marriage, religious ceremonies, and any other specified matters, provided that such greeting cards or invitations are only sent to clients, relatives, and close friends of the members concerned. In the given case, C.A. Shrishti has instructed to write CA designation on invitation card for religious ceremony, distributed the same to all relatives, close friends, and clients of both the parties. In this context, it may be noted that Council has allowed using designation chartered accountant and invitation for religious ceremony, provided these are sent to clients, relatives, and close friends of members concerned only. Therefore, C.A. Shrishti would be held guilty of professional misconduct under the said clause for sending such invitations to the relatives, close friends, and clients of C.A. Mishti as well. अपने ही उनको भेजो, उसके उसको मत भेजो, सिर्फ अपने रिलेटिव्स, क्लोज फ्रेंड्स और क्लाइंट्स को भेजो. क्लाइंट्स ठीक है, फिर भी कोई दिक्कत वाली बात नहीं क्योंकि पार्टनर थे, बट उसके रिलेटिव्स और उसके क्लोज फ्रेंड्स को थोड़ी भेज सकते हो. नेक्स्ट क्वेश्चन इज ऑन Miss Preto. A chartered accountant had an account with a bank. Normal balance in the account remained 5,000. Below 5,000, bank inadvertently credited this account with check of 270 belonging to another holder. C.A. Preto came to know with the withdrew the amount of 270, closed the bank account. After 1 year, bank noticed the mistake and claimed 275 with the contested this claim, and the bank approached the Institute of Chartered Accountants for disciplinary action against C.A.
पासबुक कहाँ रखा है?
नीचे नीचे ड्रॉर में, नीचे वाली, नीचे वाली।
ये है ना?
वही बंद कर दो, ये ऊपर से।
ये
हाँ, दोनों दोनों। Clause 2, Part 4, First Schedule, Other Misconduct, Disrepute to the Profession. Chartered accountant will be deemed to be guilty of other misconduct if he is, in the opinion of the council, brings disrepute to the profession or the institute as a result of his action, whether or not related to his professional work. CA Moni is practicing since 2009 in the field of company audit. Due to her good practical knowledge, she was offered editorship of a company audit journal, which she accepted. However, she did not take any permission from the council regarding such editorship. ये शायद 11 में हाँ. Clause 11 Part 1 First Schedule Chartered Accountant Act 1949 Permission from Council. Chartered accountant in practice shall be deemed to be guilty of professional misconduct if he engages in any business or occupation other than profession of chartered accountant, unless permitted by council so to engage. However, the council has granted general permissions to the members to engage in certain specific occupation. In respect of all other occupations, specific permission of the institute is necessary. In the instant case, CA Moni accepted editorship of a journal for which she did not take permission from the council. In this context, it may be noted that the editorship of professional journals is covered under the general permission and specific permission is not required. अच्छा, तो आप editorship of professional journals ले सकते हो. Therefore, CA Moni shall not be held guilty of professional misconduct in terms of Clause 11, Part 1, First Schedule. Next question is on overvalued assets. APK Bank received an application from a pharmaceutical company for takeover of their outstanding term loan secured on its assets. Availed from and outstanding with the nationalized bank, APK Limited requires to conduct due diligence audit in areas of assets of pharmaceutical company, especially with reference to valuation aspects of asset. State what may be your areas of analysis in order to ensure that the assets are not stated at overvalued amounts. Overvalued assets. Uncollected or uncollectible receivables. Due diligence are overvalued amounts during conduct of due diligence. Uncollected or uncollectible receivables check करो. Obsolete, slow, non-moving inventories or inventories valued above net realizable value. Huge inventories of packaging material with name of company. Underused or obsolete plant and machinery and their spares. Asset values which have been impaired due to sudden fall in market value. Obsolete, slow, non-moving inventories or inventories valued above NRV. Assets carried at much more than current market value due to capitalization of expenditure or foreign exchange fluctuation, or capitalization of expenditure mainly in the nature of revenue. Litigated assets and properties, investment carried at cost through realizable value, which is, though realizable value is much lower. Assets carried at cost, though realizable value is much lower. Investments carrying a very low rate of income or return. Infructuous project expenditure, deferred revenue expenditure, group company balances under reconciliation, group company balances under reconciliation, GCBU. Intangible of no value, intangible of no value. Litigated assets and properties. Investment carried at cost, investment carried at cost through realizable value, which is much real, though realizable value which is much lower. Assets carried at much more than current market value. Current market value to capitalization of expenditure, foreign exchange fluctuations, or underused or obsolete plant and machinery. Underused and obsolete, OUOPM, and their spares. Obsolete, OSNM, inventories or inventories valued above NRV. Uncollected or uncollectible receivables, UUR, uncollected or uncollectible receivables. OSNMI, obsolete, slow, non-moving inventories of inventories valued above NRV. Huge inventories of packaging materials with name of company. Underused or obsolete plant and machinery. Asset carried at much more than current market value. Litigated assets and properties. Investments carried at cost, though realizable value is much lower. Investments carrying at very low rate of income or return. Infructuous project expenditure. Deferred revenue expenditure. Infructuous project expenditure, deferred revenue expenditure. Group company balances under reconciliation. Intangibles of no value. Question number 17. Messrs. PQRS and Associates is appointed for conducting tax audits as per Income Tax Act 1961 of QW Limited. A cotton textile company had incurred 6 lakh towards advertisement expenditure on a brochure pamphlet published by a political party in Pune. Advised the auditor whether such expenditure should be included in the tax audit report or not. Expenses on advertisement in the media of a political party. In the given case situation, Messrs. PQRS Associates is appointed for conducting tax audit as per Income Tax Act 1961 of QW Limited, a cotton textile company. The company had incurred 6 lakh toward advertisement expenditure. As per clause 21A of Form 3CD, auditor is required to furnish the details of amount debited to P&L, being in the nature of advertisement expenditure in any sovereign brochure, pamphlet or like published by political parties in his tax audit report under clause 21A of Form 3CD. 21A में दिखाना पड़ेगा 6 लाख का एक्सपेंडिचर. Ramanuj, chartered accountant by profession, appointed GST auditor for 17th का B part है. Management has asked Ramanuj for GST audit and to file GST at 3B for month of July August. उसको बोला कि भाई तो ऑडिट भी कर दे, रिटर्न भी फाइल कर दे, ऐसे थोड़ी होता है. Responsibility of compliance and filing of return. GST auditor's prime responsibility on his engagement is limited to GST audit. The GST audit is however not responsible for any compliances like uploading GST periodic returns for the relevant audit period. Since in the given situation, management has asked auditor Ramanuj to conduct besides GST audit filing of GST 3B for the month of July and August 19 and filing of annual return in GSTR 9. Accordingly, Mr. Ramanuj has rightly refused. His scope is limited to GST audit and the scope does not cover any of the management functions. Contention of management to Ramanujan is not tenable as preparation of annual returns and its filing was responsibility of management. Question number 16. ABN Bank Insurance Company और बैंक का क्वेश्चन है. Portfolio management services. Engaged in business of ABN Bank is engaged in business of portfolio management services to its customers for which it took prior approval from RBI. Your firm has been appointed as the statutory auditors of the bank's financial statements For the year 2019-20, your senior has instructed you to verify the transactions of portfolio management services. While verifying the transactions, you noticed that the bank has not maintained separate record for PMS transactions from the bank's own investments. As a statutory auditor, what methodology will be adopted by you for verification of PMS transactions? Separation of investment functions. The auditor needs to examine whether the bank, as required by the RBI, is maintaining separate accounts for the investments made by it on their own investment account, PMS client accounts, and on behalf of other constituents, including brokers. As per RBI guidelines, banks are required to get their investments under PMS separately audited by external auditors. Thus, in the instant case, ABN Bank is required to prepare separate records for PMS, and as per RBI guidelines, PMS investment need to be audited separately by external auditors, and the auditors are required to give a certificate separately for the same. So, in the above case, the auditor should not verify the PMS transaction and advise the bank to segregate. The auditor should not verify the PMS transaction and advise the bank to segregate the PMS transaction from its own investments and provide the certificate of external auditor as described above. In case ABN does not provide the same, auditor may report accordingly. Part B. A general insurance company paid up capital 16,800 lakh. During course of audit, found company not maintaining required SM solvency margin. When the issue was escalated to management, they replied that solvency margin need to be maintained as per limit prescribed only on last day of financial year. So, as per Insurance Act, requires every insurer and reinsurer to maintain an excess of the value of assets over the amounts of liabilities at all times, which shall not be less than 50% of the amount of minimum capital, as stated under Section 6. Requirement as to capital of the Act and arrived at in the manner specified by the regulations. If at any time an insurer or reinsurer does not maintain the required control level of solvency margin, he is required to submit a financial plan to the authority indicating the plan of action to correct the deficiency. If on consideration of the plan the authority finds it inadequate, the insurer has to modify the financial plan. Subsection 2 of Section 64 5A states that if an insurer or reinsurer fails to comply with the prescribed requirements of maintaining excess of value of assets over amount of liabilities, it shall be deemed to be insolvent. It shall be deemed to be insolvent and may be wound up by the court on an application made by authority. Therefore, in the said case, contingent liabilities is not maintain solvency margin throughout the year. Accordingly, contention of contingency is limited that solvency margin is required at the end only on last day of financial year is not tenable. Question number 15. Messrs. FCA and Associates Chartered Accountant is one of the leading auditing firms in Guwahati. The firm received an assignment to examine the compliance conditions as stated in SEBI LODR regulations of corporate governance by ABC, a listed entity with no outstanding SR equity shares, special rights equity shares. The firm had made the following observation. Observation 1. Mr. Fine, one of the directors of company, also chairman of the stakeholders relationship committee, was acting as the audit committee chairman as well in 4 other listed companies and 1 private company simultaneously. So, as per regulation 26 of SEBI, a director cannot be a chairman in more than 5 committees. A director cannot be a chairman in more than 5 committees across all listed entities. However, for the purpose of reckoning the limit under this regulation, Chairmanship of committee in a private company shall be excluded. In this case, Mr. Fine is a chairman of audit committee of ABC and chairman in 4 other listed companies. Therefore, no violation of the limit specified under Regulation 26. Accordingly, this observation need not be reported by the auditor. Observation 2. Observation 2 is the nomination and remuneration committee considered of 6 members who regularly meet biannually. As per Schedule 2, SEBI LODR Regulation 19, every listed company should have a nomination and remuneration committee which shall meet at least once in a year. Since in the given case, committee met biannually, that is once in 2 years. Biannually मतलब 2 साल में एक बार मिले. The said observation need to be reported by the auditor. Nomination remuneration committee को साल में एक बार तो मिलना ही चाहिए. Observation 3 is risk management committee consisted of 9 directors, out of which number of independent directors is majority, but it was less than 2/3 of its total strength. Risk management committee में Regulation 21, only in case of listed entity having outstanding SR equity shares, at least 2/3 of risk management committee shall comprise independent director. In the case ABC does not have outstanding SR equity shares, accordingly this observation need not be reported by the auditor. तो दो ही रिपोर्ट करना है. कौन सी कमेटी है? रिस्क मैनेजमेंट कमेटी RMC. इसमें मोर देन 2/3 इंडिपेंडेंट डायरेक्टर्स होने चाहिए अगर स्पेशल राइट इक्विटी शेयर्स हों तो. ठीक है. और नॉमिनेशन रेम्यूनरेशन कमेटी को शैल मीट वंस इन अ ईयर. Question number 14A. Petro Limited is engaged in generation of electricity for captive consumption through captive generating plant. The company also maintains cost records in its books of accounts as required under cost records. Mr. Zylo, friend of MD company, suggested name of his brother, cost accountant in practice, purpose of cost audit. However, statutory auditor of the company is of the view company is not legally required to conduct a cost audit. Now the managing director is in dilemma about the requirement of cost audit. इलेक्ट्रिसिटी कंपनी है ना, तो कराना पड़ेगा. Applicability of provisions of cost records and audit. The provisions relating to cost records and audit are governed by Section 148 Companies Act. Read with companies cost records and rules. Rule 3 of companies provide classes of companies engaged in production of goods or providing services required to include cost audit in their books of accounts. However, requirement for cost audit under these rules shall not be applicable to a company which is covered in Rule 3. अच्छा, इसमें नहीं होगा फिर ये शायद, इसमें नहीं लगेगा. इलेक्ट्रिसिटी कंपनी एक्सक्लूजन में है. Whose revenue from exports and foreign exchange exceeds 75% of its total revenue. टोटल रेवेन्यू का 75%. टोटल रेवेन्यू बोला है, टर्नओवर नहीं बोला. exceeds 75%. Revenue from exports exceeds 75%. Which is operating from a SEZ. Which is operating from a SEZ. उस पर भी नहीं लगेगा कॉस्ट का, कॉस्ट ऑडिट. Which is engaged in generation of electricity. Therefore, Petro Limited is not required to conduct cost audit. Question 14 Part B. AKB Associates, a renowned audit firm in the field of CA practice for past 2 decades. The firm was appointed to conduct statutory audit of Rika Limited, an unlisted company which is engaged in the business of paper manufacturing. It decided to comment on the audit of recently concluded financial year. Once after making significant progression in the audit, auditor made the following observations. Observation 1. The management had disclosed in the financials that during the year one of the warehouse of the company was affected due to a major flood. As a result of the same, the company had incurred some losses, but the management was of the view that it is not material. As per SA 706, emphasis of matter paragraph and other matter paragraph in the independent auditor's report, an emphasis of matter paragraph refers to matter appropriately disclosed in the financials, that in the auditor's judgment is of such importance that it is fundamental to users' understanding of the financials. Hence, in this case, the auditor shall report about the consequences of the flood which affected the company's warehouses. Under emphasis of matter paragraph. Observation 2. Due to flood, few records maintained by the company with respect to record particular transaction was completely destroyed and there was no duplicate record maintained by the company. However, those details were not pervasive but material. As per SA 705, modification to opinion in the independent auditor's report, where the auditor is unable to obtain sufficient appropriate audit evidence and where such matter is material but not pervasive, the auditor shall issue a qualified opinion. Thus, in the given situation, on account of flood, few records pertaining to particular transaction was completely destroyed, and in absence of duplicate records, the auditor was unable to obtain sufficient appropriate audit evidence, and those details were material but not pervasive. Therefore, in accordance with SA 705, the auditor is required to issue qualified opinion. Question number 13 का part A. MEA Limited is a listed company having its operations across India. MEA Limited appointed Mr. XYZ joint auditors for year 1920 after making sure that all of them qualified to be appointed as statutory auditor. MEA Limited issued engagement letter to all of them, but Mr. X was not clear on some points, so he requested MEA Limited to slightly change terms of his engagement. Agreement on audit engagement terms. Says 210. Agreeing the terms of audit engagement. The auditor shall agree the terms of audit engagement with management or those charged with governance as appropriate, subject to prescribed details under law or regulation. The agreed terms of audit engagement shall be recorded in an audit engagement letter or other suitable form of written agreement and shall include the objective and scope of the audit of the financial statement, the responsibilities of the auditor, responsibilities of management, identification of the applicable financial reporting framework for the preparation of financial statements, and reference to the expected form and content of any report to be issued by the auditor, and a statement that there may be circumstances in which a report may differ from its expected form and content. Reporting by the user auditor. As per SA 402, audit considerations relating to an entity using a service organization, the user auditor shall modify the opinion in the user auditor's report in accordance with SA 705, modification to the opinion in the independent auditor's report if the user auditor is unable to obtain sufficient appropriate audit evidence regarding the services provided by the service organization relevant to the audit of the user entity's financial statements. The user auditor shall not refer to the work of a service auditor in the user auditor's report containing an unmodified opinion unless required by law or regulation, or to do so. If such reference is required by law or regulation, the user auditor report shall indicate that the reference does not diminish the user auditor's responsibility for the audit opinion. Thus, in view of the contention of CA, Raman is removing reference for the work done by service auditor is in order. As in case of unmodified audit report, user auditor cannot refer to the work by service auditor. Done.